He's a billionaire and he says that Tesla's iPhone moment is now at hand. He says that in 2016 his first pick was Amazon, which has done great, and in 2017 Tesla, which we all know has done very well. The billionaire says the comparison I made at that time in 2017 was that Tesla was like Apple and the Model 3 and Y were its iPhone moment. I thought this quarter's results were a bit dumped on, but I had the opposite reaction. I think Tesla's iPhone moment is now at hand. When a billionaire who was right about Tesla before says that this is a huge moment for Tesla, I think you want to listen to him. He continues, high interest rates today generally diminish demand, supply chain inflation increases cost of goods sold, which generally results in higher end prices. Taken together, these phenomena usually drive lower consumer demand for most companies, but Tesla cut prices and demand grew. While these price cuts ate into their short-term margins, higher demand allowed them to make huge profits because of volume. The takeaway for me is to rationally keep cutting prices to saturate the world with their product. You rarely get a chance to build a monopoly. When given it, take it. Sacrifice gross margins in the short term to drive worldwide saturation in the long term, especially if you can be profitable doing it. My preference still remains the same, even though Tesla earlier committed to doing a little advertising. I would prefer to do more price cuts if we need to stimulate the demand, because this gives Tesla higher market share, and it makes so difficult for competitors to catch up later. Number 2, cost of goods sold are now flattening and margins will start going back up as supply chain inflation eases. And as rates eventually start going lower, demand will naturally go up, all else equal. Tesla should then be able to flow as much of these to the bottom line, but if they keep cutting prices, demand will go nuts, while total profitability also still goes up. That's a unique place to be. But Tesla, of course, is a very unique company, so it suits Tesla really. They have struck deals to share their charging network with other automakers, and now are also in discussions to license FSD. This is Tesla becoming a true platform company that has their apps, Model S, 3, X, Y, but also enables other apps. And the take rate on third-party apps is a very lucrative business. I mean, you look at Apple, they take a huge share of everything you make if you have an app with them. When Apple ran this similar playbook towards global domination, they took gross margins down about 15 to 20% for a few years between 2012 and 2014. And they kept them there until 2020 or so, and then brought them back up along with prices, and the outcome was a $3 trillion company. Tesla's upper bound still seems unwritten, even while they have essentially told us they are going to run the same play. And a lot of Wall Street just wants to push Tesla into doing things that really benefit Tesla short term. By that I mean making Tesla stock price go up in the short term. But then they ignore this huge opportunity where if Tesla continues doing this, they cut prices further, they dominate the whole marketplace, making it close to impossible to even try to attempt to compete with Tesla. Tesla is incredibly efficient and they are so good at cutting costs. But before, when Tesla was at 30% gross margins, a startup would look at that and say, oh, you know what, maybe we can do 30% margins, but what if we can do 9%? Maybe that's possible. Let's try and find out. But now a startup looks at Tesla and says, you know what, under 20%, and Tesla is so good at cost management. They are so efficient. They innovate so much. Yeah, I don't know if we should really even try. And if Tesla cuts their gross margins even lower, then no one can even try to attempt to really seriously compete with Tesla. Dan Ives, who is one of the top Wall Street analysts currently, was just on TV again, and he shares a rather similar opinion to the opinion that the billionaire just shared.
I do view Tesla how I viewed Apple in 2008, 2009. You'd come out of quarters, investors would sell it on iPhones, and our whole view is look at what they're building, look at the services. That's the key to the sum of the parts valuation. And you snap your fingers fingers, and here we are at 3 trillion, where a lot of investors thought 1 trillion was never going to happen.
Well, remember how just back in December, many people were saying this is not the bottom for Tesla stock? And some Tesla stock bulls even sold their stock, although in Tesla economist's case, at least he did end up buying back in later. So just like many people said that $1 trillion is not going to happen for Apple in market cap, a lot of people are saying that Tesla stock is not going to get to $2 trillion, $3 trillion, $5 trillion ever. I am convinced they will be wrong.
This is just what I view as the second inning of a 9-inning game for Tesla. And I think ultimately now you're starting to see demand stabilize and I think ramp, especially in China and the US. Prices, now look, Musk didn't take off any more price cuts, which why the stock knee-jerk got hit a bit, but they're not going to put their back against the wall. And I ultimately believe 95 to 98% of price cuts are in the rearview mirror. And now you start to get that sum of the parts story, from superchargers to AI/FSD, talk about the OEM that they're in talks with, to battery technology. And I believe there's a stock that continues to go higher despite this knee jerk after what's obviously been a parabolic year.
It's just a second inning of a 9-inning game. It's not often that you will hear a Wall Street analyst talking long-term about Tesla stock. However, Gary Black sounds caution. He says this is not the first time Elon has said that Tesla was in discussions with an automaker about licensing Tesla FSD or autopilot software. On the 2020 Q4 earnings call, which happened 2.5 years ago, Elon made the same claim. This could be a huge positive increment to Tesla valuation, or it could be nothing. I slightly disagree with Gary here. This is what Elon said this time. He said, "We are already in early discussions with a major OEM about using the Tesla FSD." He did not mention autopilot in this sentence. He mentioned FSD. This is a transcript of the call from 2.5 years ago. Elon said, "I think we are very open to licensing our software to third parties, and we have had some preliminary discussions about licensing autopilot to other automakers." He is primarily talking about autopilot and not about FSD. Although Elon did mention full self-driving a few moments later, we need to probably do a little bit more work to prove that Tesla autopilot is capable of full self-driving. So it's a bit confusing how he is mentioning that Tesla autopilot is capable of full self-driving. These are two different things. There's Tesla autopilot and then there's full self-driving. So this language was a bit confusing from a few years ago. Maybe Elon just meant, because we would have full self-driving, then autopilot naturally will also be better. It's not full self-driving, but it will help you avoid accidents, certainly, and autopilot on highways works great. And even if you use it in the city, it will help you avoid any kind of accidents. But in the last earnings call that we just had, he specifically mentioned FSD and not really autopilot. Gary could certainly be right that this may turn out to be absolutely nothing, but I am convinced that if that turns out to be true, it will only be true short to medium term, not long term.
What is the opportunity in licensing FSD? Because I know you're bullish on that. You just mentioned it.
I think that could ultimately be even bigger than the opportunity that we've already seen in Tesla the last decade. Because of the software-based opportunity on FSD. And I think if they start to actually license out that technology to other OEMs, similar to what we're seeing on Supercharger, there could be maybe tiers and subscriptions. I think that's the golden goose. I think when you look out into the next 5-10 years, and obviously Kathy talks about this for robotaxis, I think that's where this story totally changes. And that's why I do view Tesla how I viewed Apple in 2008, 2009.
In the last 5 years, Tesla stock went up more than 10 times. And now Dan says that the opportunity is bigger than before. If Tesla stock goes up another 1,200% in the next, let's say, 5 to 10 years, that would put Tesla stock at about $10 trillion in market cap. It sounds crazy when I say it because many countries don't even have a GDP that is equal to $10 trillion. But that would be more like revenue of Tesla. and not how much a country is worth. And actually, it's not even really accurate to compare a country's GDP to a company's revenue. I'll get back to that in a second. But occasionally, I still hear arguments that say, you know, Tesla can never ever get to $10 trillion in market cap because no other company has done it before. But if you go back years ago and you look at what people were saying about Apple, Microsoft, Google, Amazon, Nvidia, they also, many of them said that these companies, they can't get to $1 trillion market cap because there are just no companies that are that big. I mean, some countries don't even have a GDP of $1 trillion. And now we have 6 companies here over $1 trillion in market cap each. If you look at the biggest countries in the world, we have 19 countries that have GDPs of over $1 trillion per year. Tesla this year is on track to have the first $100 billion revenue year. And if you make the mistake and say that a GDP of a country is the same thing as a company's turnover, well, you will make a mistake, but that would put Tesla roughly in the 72nd, 71st place. In many cases, a country's GDP is more similar to a company's profit than it is to a company's revenue. There are, of course, some nuances. If you like, you may read the whole thing. For Tesla to reach a market cap of $5 trillion, assuming that Tesla stays at a price to earnings ratio of, let's say, 30, Tesla would need to generate $166 billion in profit per year. In other words, it would be slightly bigger than Ethiopia if Tesla was a country. And if we oversimplify everything and we just double everything, that would put Tesla roughly at the size of the land of the Tates, Romania. I want to emphasize that I'm oversimplifying everything here, but you get the picture. There's a lot of nuance than comparing a company and a country.
Dan, you talk about the murky macro picture, I believe is your terminology for it. Elon Musk says the challenges of these uncertain times are not over.
I think around the edges, you can maybe see some rebates, some price cuts, but ultimately in terms of margins, I think they're flatline. I think flattish to ultimately start to rebound in Q4 into next year. Not going to box himself into a corner, Tesla, especially what we're seeing in China. But I believe the vast majority of that's in the rearview mirror. I think demand looks strong. And you talk about the murky macro. I mean, our view, this is not calling the stock for the next few weeks. Fed, in terms of worries about, talking the tough talk, even though the white flag, in my opinion, is raised in terms of the end of these rate hikes. I look into 2024. I see a bright green light for Tesla, for tech. I think it's the start of a new tech bull market, in our opinion.
The macroeconomy affects all of the stocks in the stock market, and how much attention do I pay to the macroeconomy? Well, I pay 100% of my 1% attention to the macroeconomy. I am a long-term investor and I see a fantastic future for Tesla for the next 10 to 15 years. And there's one thing that I can certainly expect, and that is a recession, certainly, almost, sometime in the next 15 years. However, spending all of my time just looking at the macroeconomic data instead of looking for great companies, I think is a huge waste of time. Unless you are trying to preserve your wealth and not necessarily grow it. Especially if you are closer to retirement. I am still very far away from my retirement, although I did try to retire a few times. And I can say with 100% confidence, retirement is just not for me. I'm going to be working till the day I die, or at least until the day that I'm physically capable of working. If you didn't notice, I upload videos literally every single day, including on weekends and holidays, unless I'm recovering from surgery or there's a really seriously pressing family matter. On the other hand, if my investment horizon was less than 5 years, and especially if it was less than 3 years, I would be paying quite a bit of attention to the macroeconomy. If it's 10 years, I think you can mostly get away without really paying attention to it. And if it's more than that, I don't really think you need to pay much attention to the macroeconomy. And with that being said, the interest rates are going to be going up. It appears almost certainly 99.2% chance that they go up in a few days again. However, it is expected that the interest rates will come down in the long term, especially with inflation having slowed down so much. we're looking at 2024 November here at possibly 4% instead of over 5%. That should be positive for stocks like Tesla and any growth stocks.
And, you know, I could just tell you, I think it's a 1995 moment, start of the internet. This is not 1999, 2000 bubble hype.
Well, if Dan is right here, then the buying opportunity for Tesla stock at these low prices is not going to last for a very long time. I bought quite a bit more Tesla stock than usual back in December, but I keep buying every single month. But if somehow we go really low again like we did in December, I will be depleting my cash reserves again.
Is there any concern, though, that a lot of that optimism is already priced in? Because when you do look at Tesla, top and bottom line actually beat, yet Tesla's lower this week.
I think it's more digestion after just a massive rally, you know, tech stocks up, call it 35, 40%. But I don't think this is the end. I think it's a pause ultimately before this tech market goes higher. Because when you look into 24, you look into 25, especially with the Fed ultimately white flag, where they're basically done raising rates, you know, despite any what the hawks will say, that's a risk-on environment. Bullish for tech, and I believe we start seeing improved macro. And unless you have a telescope or some sort of a range that I don't see, it's hard to find that recession.
If Dan is right, that is really good news for Tesla stock in the short to medium term. And YouTube says you should watch this video next, but if you haven't finished watching this Elon Musk interview, watch this one first. My name is Matt Posios. Like and subscribe if you haven't yet, and I will see you in the next video. Thank you so much for watching.